Well, we're halfway through the year, and today we're going to look at the end of June month's housing market data to see what's happening around Australia. And once again, home prices have increased. However, we have a multi-speed market, as Dr. Andrew Wilson is going to detail. Perth, Brisbane and Adelaide have become clear leaders in price growth. Melbourne and Sydney are middle tier, and Hobart and Canberra are wildly underperforming. If you want to keep up to date with what's happening to our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can keep you informed each time a new show comes out. It's hard to believe that we're already halfway through 2024, so I'm looking forward to catching up with Australia's leading housing economist, Dr. Andrew Wilson, to unpack the latest My Housing Market data. But before we do that, it's worth looking back at the last 6 months, as our housing markets have been remarkably resilient. Overall, our housing markets performed strongly last year in 2023, but by the end of the year, there was a noticeable deceleration, slowing down in home price growth. At the time, interest rates had just increased again for the 13th time, but they were expected to have reached their peaks at that stage. But the stock of new listing coming to the market and total listings of property sales were increasing. And this led many commentators to forecast slower house price growth. They thought this would continue on, slowing down until tax cuts and interest rate cuts occurred, many thinking they'd happen in the second half of this year. Yet, despite the lift in stock for sale, and there was also an significant increase actually in the sales volumes, price growth has continued. But our housing markets have been very fragmented. There are a number of tiers. So I'm looking forward to seeing the latest My Housing Market data today. Hi, Andrew.
Thanks, Michael. Yes, and we have passed through the first half of 2024, and the big picture is that overall house prices have continued to rise. But we are seeing a consolidation of that multi-speed market that has emerged, particularly over the first half of this year. House prices were up again, national house prices up again by 0.2%, to a new median of 1,137,767. So that's the
Wow.
national house price.
Well, I can see this in the chart here, Andrew. And you mentioned that they're quarterly median house prices, but maybe it's worth just explaining how you derive your figures, Andrew.
Yes, well, we take a quarterly snapshot of the housing market, house sales, but we move that from month to month, Michael. So we have a rolling quarterly house price model. So what we do in terms of growth is compare the latest quarter, which is the June quarter, to the results over the May quarter. So we have a rolling quarterly price set that we change every month, or we move from month to month. So this gives us a robust insight into the market. So we're not just using static quarters where we compare the prices, the results to the previous 3 months quarterly results. So we're not comparing the June quarter with the March quarter, we're comparing the June quarter with the May quarter. So that gives us a much more current set, and as well as giving us a more current data set, we're looking at a robust data set. That's 3 months of observations of sales. So yes, the national house price up by 0.2%, a little bit lower than what we recorded over the May quarter, where we were up by 0.3%, but nonetheless very similar results. And that new record high median house price, 1,137,767. And of course, this is a weighted average. So the national house price, because really there is no such thing as a national house, is based on the volume of activity in each of the capitals. And of course, the more significant capitals in terms of activity being Sydney, Melbourne and Perth, they make up more of the impact of the national house price. But that's 16 of the past 17 months where we've seen the national house price increase. It's up by 8.6% over the year, and over the past year up by 7.3%. But as I said before, Michael, we're really seeing a consolidation of that dual speed or multi-speed housing market. Once again, when we look at the capital city breakdowns, it's Adelaide, Perth and Brisbane that continue to lead the charge. They recorded solid to strong price growth over the month. Brisbane up 1.3, Adelaide up 2% and Perth up 2.7%. Again, the leading performer over the month. So strong results there. Sydney was flat over the month. Melbourne down again 1.3%. Hobart and Darwin were the underperformers, down. Hobart down 2.4%. Darwin, of course, produces volatile results because it is a smaller market and is actually also influenced by significant seasonal factors. The Canberra market also recorded growth up by 0.4%. But when we look at the annual figures, Michael, it really does validate that multi-speed market environment. Brisbane up by 18.7% over the past year, which is really a boom time result. Adelaide up 16.9%. And that Perth housing market is really red hot at the moment, with the median house price rising by 26.8% over the past year. So it really is, it reflects that multi-speed market. We've seen the impact of lower than higher interest rates, that ripple effect work its way through the system now. And it is very much about local factors driving housing markets. And I think, we've obviously seen that consolidate over the first half of this year. And I think in terms of house prices, we'll continue to see that diversity, that divergence in results, as we've just discussed. But once again, overall, national prices up, but we would expect some easing going forward, although the forward indicators, Michael, as we do discuss, particularly auction clearance rates, are holding quite positively at the moment. And as you mentioned, Michael, the number of sales has been at record levels this year so far. And that's because we've seen that surge in listings coming forward, which is always the sort of the back end of the cycle and signals the maturing of the housing market cycle. Last year, it was driven by buyers coming into the market looking for value and finding value because prices were lower at the beginning of last year than where they were the previous year. And now we've got sellers taking advantage of those higher prices with elevated confidence coming into the market. And as I said, we've seen record auction sales over the first 6 months of this year compared to the same period in any other time. So, but we are entering that mid-year market, and we are likely to see some easing in activity.
Well, that always happens around winter time anyway, so that's not a surprise. Of course, as sellers are coming into the market, sure, there's a number of investors selling, but most sellers are homeowners, and so they're still buyers. They're looking to upgrade because their family circumstances have changed, or right size. We used to call that downgrading, but often they're right sizing to good quality apartments. So the housing markets are still going to continue on. Of course, affordability is going to be an issue for some. So some will now look at units or apartments rather than houses. How has the unit market performed, Andrew?
Well, again, Michael, there was a stronger results for units compared to houses over the June quarter compared to the May quarter. The national unit house price was up by 0.7% to 656,862. That's an increase of 4.5% over the year so far, over the first 6 months, and up by 7.1% over the full year. So good results there overall for the national unit price. Again, we're seeing that diversity in terms of performance between the capital city markets. Top performers were, you guessed it, Adelaide and Perth, up 1.8% over the month. We saw a Hobart up 1.6%. That bounces around that Hobart unit market because it is a small market, so there is some volatility there. Sydney unit prices continue to grow, up by 1%. Melbourne a little softer again, down by 0.3%. Just on the Melbourne market, Michael, we are starting to see some early signs of a beginning of a pickup, particularly in the unit market in Melbourne. Melbourne, of course, is undergoing, I guess, with all other capital cities, a surge in rentals. A little bit late coming to that particular party, but we have seen a big increase in rents this year in Melbourne. At one stage there, Melbourne was the most affordable market for rentals for units, but it's now surging. And of course, that means higher yields. And those higher yields are starting to attract investors. In fact, in some suburbs, we're seeing 8 and 9% gross yields for units. And that's certainly bringing in investors And we are starting to see some sales, particularly in the areas around about in those university sectors, the higher ed sectors. So I think those early signs are positive for the Melbourne unit market going forward, but we're not seeing that translated as yet into prices growth. And that Melbourne market still remains a value market with prices still below where they were 2 years ago. So but when we look over the past year, similar story to what we saw for houses. Brisbane unit market up by 24.5%. As I mentioned, that Adelaide unit market is a small market, tends to be volatile. Similarly in Perth, it's a small market, but nonetheless, prices growth has been similar in the unit market in Perth and Adelaide as to houses. Very, very strong results there. Sydney up 5.3% over the year. And again, Hobart, which emphasises a smaller market, down by 5.8%. But we continue to see that divergence, that multi-speed market in units as we did in houses, Michael, and I expect to see that continue going forward.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Luke, going forward, what are your thoughts? What's going to drive the market moving forward?
Well, look, the essential elements are that we have too much demand and not enough supply, Michael, and certainly not enough supply. That will continue to incentivise particularly first home buyers that are struggling to get into the market because of high rents and higher prices. But investors, as I said, are now being attracted to those higher yields, and we are seeing a rise in investor activity. So, there's no sign that we're going to be able to replace or to, get anywhere near the undersupply or fix the undersupply that we have in our housing markets, despite the efforts of the national government and state governments to obviously improve the situation. That they're not really building the homes. That's what the private sector does. And regardless of policies to improve infrastructure and planning, it's not going to result in anywhere near the homes that we need to house our population, particularly with migration to continue. And our economy is still strong. We've obviously had some mixed news on inflation lately. The inflation rate increased actually quite sharply over May. The headline number was up to 4%, which is really a concern. The underlying number actually fell. But we're now tracking underlying and headline at around about the same level, which is 4%, and that's well above the Reserve Bank's target. And this is certainly going to put some pressure on the Reserve Bank if it continues. We've often discussed, Michael, the relationship between oil prices and inflation, and that continued to hold. Higher oil prices, higher inflation over May, and not sure there's any relief coming over June, but we'll wait and see for those results. But that does put upward pressure on interest rates. But the Reserve Bank has said that it's going to wait for a longer term view of the inflation rate before it considers higher rates. But certainly, the breakout that we've seen over recent months in inflation is not a positive for interest rates. But having said that, we still have a very strong economy, near record low unemployment rates at 4%. But in the context of the longer term labour market, that's a very low result, higher than where we were a year ago, but it's still driving strong wages growth. So I think confidence is still there in our economy, and that would be tested perhaps with higher rates, but I still think higher rates are some way off, and it will depend on the inflation results over coming months. But overall, markets are being supported very much by high demand, low supply, and a strong economy, and I expect that to continue. And also the as we've discussed today, that multi-speed housing market, which is clearly a significant descriptor of what's occurring in our housing markets currently.
We'll be back each week with our regular Property Insider chats, where we'll break down the auction results that you announce on your LinkedIn every Saturday, and we publish in Property Update every Sunday. And it'll be interesting to get your thoughts on what happened with inflation when we chat in a couple of days' time. In summary, our housing markets performed well again over June, but multi-speed markets, Perth, Brisbane, Adelaide, remained the clear leaders, and Melbourne and Sydney were the underperformers, but there's likely to be a revival there, but maybe not over the next couple of months. Catch up with you again in a couple of days' time for our regular chat, Andrew.
Yes, thanks, Michael.